Good morning, traders. Welcome to Thursday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. You can also see some of those on the screen, but that will give you all the levels that you need for today. Before we jump on in, we always need to check the news, so that way we know what's going on and when, right? We don't want to be surprised by anything. So as far as the news calendar goes for today, the first batch of news begins at 8:30. We've got the continuing jobless claims forecasted at 6.4 thousand. Now those are the small jobless claims. Those aren't the big ones. The big one is the initial jobless claims, and that's forecasted at 707,000. Previous was 709,000. Also at 8:30, we have the Philly Fed Manufacturing Index for November, forecasted at 22. The previous was 32.3. Later on at 10 o'clock, we have the existing home sales, forecasted 6.45 million. Previous was 6.54 million. And then today is Thursday, so at 10:30 we have the natural gas inventories, and then going into later on we've got the 4 and 8 week bill auctions and tips auctions, and FOMC members speaking at 12:35, but nothing else really big. The big news today is at 8:30 and 10 o'clock, and beyond that, it dies off a little bit. So that's going to get things on the news side of things ready. Now we can jump into some charts for today, 11/19 of 2020. First up on the list is going to be the micro NASDAQ, and seeing some, obviously there's been a lot of volatility with that big drop to the downside yesterday afternoon, but now that we've kind of broken a little bit lower, we're breaking underneath the previous channel, and at the moment it's already down to S2 and finding a little bit of bullish support down here. Now bullish support in the sense of seeing divergences. There's MACD divergences compared to price. We've got basically divergences on everything. And one big clue also is when there was that big push to the downside, if we look down at the volume, that's also where the majority of that push came from, which would indicate that there's a lot of profit taking going on down there. And the fact that right now we're seeing the market flush back, volume increasing, but now it's closing way up here with a big wick on the bottom, it's still showing that, well, there are buyers coming in down here. It's obviously having a difficult time making its way lower. We are making lower lows, and it seems like there's a good chunk of resistance coming across here at around the 895s. So if the buyers are going to take over, realistically, they're going to have to break not just through that area, but also kind of fight this falling resistance and the tendency to want to go into a channel. So for the market to go higher still has a lot of stuff in the way for that to happen. At the moment, the bears are still in control and still driving further down, but there are some obvious problems selling this far down. At the very least, sellers are going to want to sell a little bit further up. Next up is the S&P 500, and again, with very similar movement that we're used to seeing between the NASDAQ and the S&P, we're also seeing a much more pronounced megaphone. The NASDAQ was putting in a little bit more of a flat topped high. This has, the S&P has some very obvious higher highs, lower lows. We're creating a megaphone. So with this push to the downside, the market's getting close to S2, which is 35.38. We're showing a bunch of divergences again, and just like the other on the NASDAQ with volume, when the market came down to the lows, there was a huge amount of volume surging in that would suggest at least that there was a lot of profit taking, and when it came back time to try to push back through, it was just totally dead. Nobody even cared. So looking for a rotation back to the upside makes a bit more sense on the S&P right now, but if the buyers can't hold it, well, then it starts becoming a wide open door. The market rallied away so aggressively where the last levels of support are right around here, 35.10, but then if that breaks, there really isn't anything until much farther down, and then below that, and then below that, you can see, it's spaced out quite a bit. So the market's going to want to try to hold up here if it's going to keep things going. Otherwise, the sellers could be looking for a big breakdown continuation. Right now, it looks like buyers are trying to put in a bottom, but they're going to have to break through back to the upside, break the top of this megaphone, or at least hit it and then get a higher low in a continuation, something like that, to get the market back into that channel and potentially pushing back up towards the high. Switching gears over to the gold side of things, and it's, I mean, man, what a rough time gold has been having. We had that big push to the downside back at 1861.8 over here, and then when it came time to try to retest, it bounced again. But then this time, the market came back down, and it's just been an absolute slugfest. You know, the last few times were very quick. It hit it, it was gone. This time it's really hanging around here, and that certainly isn't showing the amount of aggression that the buyers were before. Couple that with all these lower highs working its way down, there's some obvious issues, right? Buyers are going to want to try to take it, but I think sellers have been so persistent that in order for swing buyers and sustainable buying pressure to step in, they're going to need to see some new highs, some swing highs, some actual proof, because realistically they're just not really getting it, right? I mean, especially zooming out with that giant flush back on the 8th, it looks like it's kind of breaking down rising support and gearing up for another flush back down through the 1850s. So buyers just, there's too many issues for buyers to want to do much, but at the same time, it's a little too far down to want to sell way down here as well. We've got a little bit of a fist fight back and forth. It'd be preferable to sell a little bit higher, more like range rules, back up towards like the 1865s or so, than where it is now. But if it starts breaking through the top, then probably back to the pivot, back to the previous zone of support resistance. The downside just has so much more emphasis right now. Then we've got crude oil, and crude oil creating some very nice bullish movement to the upside. We've still got that wider channel-ish, kind of a wedge if you draw the lines long enough. But realistically, it's basically a channel working its way up, and we've got a bunch of support that's beginning to stack up around the 4120s. Now, notably, a couple other things. The bear channel that was working lower, normally when we've got that bear channel movement to the downside, you want to see them really kind of continue to test the areas, right? Come off the highs of the channel, get back to the lows of the channel, come off the highs of the channel, go to the low of the channel. But when we see a situation where it breaks out above the highs just a little bit and then flushes all the way back down again, but now they're missing the lows, that could potentially be a big sign of aggression from the bulls. It's very early to tell, though. I mean, again, it's that excess proof that a lot of these markets are missing. It's just early indications. And right now, the bear channel is working its way lower. The previous major rising support low is what's causing the potential issues. So realistically, buyers may try here, but in the same breath, you can also see how if the buyers fail to get things going here, sellers are going to want to roll right back in and drop the market back down. Don't lose sight of both ends of the market. It's very easy to do when you're zooming in a little bit closer. There are definitely an argument to both sides, and right now the bear side still makes a little bit more sense. All right, and then over onto the euro, we've got some good movement overall, getting a little bit more sideways. When we zoom out, we can see that significantly larger trend channel still working its way higher. The market's breaking underneath it and now attempting to break out lower. We did follow it up with another low. That's not good, right? That's kind of a bad sign. That's at the very least, right? That's not what the buyers want to see. Now, one thing that they do have working for them, we've got a divergence setting up on a few of the indicators, suggesting that maybe there's a little bit more likelihood of this turning into a range. We're also seeing a big bump in volume down at the lows, but price is still continuing to grind lower. And if the buyers are going to take this, where are they, right? That's kind of the big question. So if buyers aren't showing up to the party and, well, sellers just continue to push this lower, I have to assume that we're probably hunting for another move down to finish an objective. And an obvious objective is this massive swing low sitting down at 1.18205. So if the market's going to continue down, it's probably gunning for something, and that would likely be the scenario. If the market's going to put in a low, like base, and start turning around, this is the type of area that you'd expect it to do it from, right? It's down at S3. It's at previous major swing support. There's a lot of things to like here, but just like all the other markets that we've seen today, it's lacking that excess proof. And then finally over on Bitcoin, still wedging, not really doing a ton, honestly. Bitcoin's just sort of consolidating after that ramp up to 18,000. This overall movement that's been going on, I mean, given what's been going on, it would make a lot of sense that buyers probably bought that flush down. We saw a huge amount of volume come in. That would also suggest that that's what happened. And if we're looking at this area in terms of volume, this low point, which was the low of that blow off, is starting to become a zone of interest where it's creating this kind of wedge, and anything inside of here becomes kind of an opportunity zone. Now, to be fair, the market's still downtrending. We haven't broken any of this falling resistance yet. Even the MACD has a trend channel to it. Even the RSI has a trend channel to it. Everything is potentially trending to the downside. So by no means do the buyers have a reason to want to buy yet, but they're showing some good consistency. And all of these failures at the lows with stacked volume buying into that low, it helps a lot. And now when we're looking on the nearer term, we can also see, if we zoom in a little bit here, if we look in the nearer term, we've got a bit of a stochastic divergence as well, where this move down is making a lower low. We're starting to see higher lows. Things are starting to, again, try to put in a base down here, but in order for the buyers to take it, they've got to break above the highs, get back towards those 18,000s, maybe even break that previous swing, and then give a higher low and a continuation up from there to see if they want to stick that landing maybe back into the all-time highs, huh? All right, well, that's going to do it for today. Stay safe out there, keep those stops in play, and let those winners run. I hope you have a fantastic trading day today, and we will see you all tomorrow. Have a good one. Thanks.